scarred the memories parents told their children. 1929 became a minds. I mean, if you said 1920, saying 1776 or 1492, I mean, everybody knew exactly what you were. 1929, my dad, security salesman by a local small bank. He sold stocks and bonds, but he mostly sold stocks. And when stocks fall 48%, and you were you don't feel like going out and the same people. So I think my dad probably elected to do, as they say now, shelter in place, which means, and there really wasn't that much in our. Under those conditions, I was 9 months later, so I didn't notice at the time that the market was closed, but we're 20% during that 9.
All right, man. Yes. What is going on?
Under those conditions,
not a week goes by that we don't seem to have some sort of drama. Looks like my sound is busted, bubbling. Hopefully we're doing good now. A little bit of Warren Buffett there in the beginning. This week was not drama-free, man, inside of the money flow. If you've been following financial news at all, then you know that SBD Bank, a bank based out of Silicon Valley, has fallen. And if we look at this chart, and the volume is so large and the drop so big, I mean, they turned it off at $106.94. This was a $270 stock, guys. Now, I want to point out, and it wouldn't have known that this was going to happen, but look at this. You got a pretty good sales signal. Not that maybe you'd have known to sell, but if you know, I believe that price moves in 4 stages, and it goes through this flow I call the money flow, where it drifts sideways, it goes up, it drifts sideways, it comes down. And that's what we see here, man. You know, how do you apply that? Let's pull this up. How you apply that, man, is really up to you. But this pattern here is just human emotion. And the cool thing is, and I won't get too down in the weeds on that, about the fractal nature of this, nature's fractal. Let's be for real. You'll see these patterns over and over, and wind and seasonal rotations and sky and the alignment of the moons, and all these things are going on in nature that are just kind of this fractal pattern, and it just keeps happening over and over and over. And it's never the same, and I don't remember what philosopher says, whenever you stand in the river, it's never the same river, and it's never the same man standing in the river, man. Nature flows. And it's chaotic. Now, what Uncle Warren was talking about there was the great crash of 1929. When you look back, it looks obvious. You're like, yeah, duh. It's like, but when it started, it surprised somebody. People are like, oh, shit. You go from enthusiasm, everything's doing well. This bank, Citizens now everyone's been reporting they were the 16th largest bank in America. That may be at one time, but according to Wikipedia, SVB Financial Group was the 18th largest bank in America, based in Santa Clara, California. Total assets, less than Berkshire Hathaway, by the way, $212 billion. $212 billion assets, market cap $26 billion.
Rely on their tried and true strategies. Cambria Investment Management CIO and co-founder Meb Faber is here with his take on where the market is headed next. Meb, thanks for coming on the show.
Great to be here.
So let's start with the news at the end of the week. What's the takeaway for investors from Silicon Valley Bank's implosion, and do you expect contagion?
Symplosion. That's this right here. Big stage 4 decline. Now the money flow rolled over and gave us a decline. Maybe we can blow this up a little. Hold on. Look at that. We get a signal, what, 290? That bitch goes from $290 a share to implosion right here. Where's it at? I got this. Hold on. SVB Bank was formed October 17th, 1983. Did you know that? Silicon Valley Bank was founded as a wholly owned subsidiary of Silicon Valley Bank shares, now SVB Financial Group, which was the 18th largest bank, on October 17th, 1983 by Bill Biggerstaff and Robert Mardirez, who came up with the idea over a poker game. Playing poker, come up with the idea. Meaning the universe can speak to you in a lot of ways, in a lot of different places. How many poker games you've been to and you didn't come up with the idea to start Silicon Valley Bank? These guys playing poker come up with the idea for the bank. The first office opened in 1983 on North 1st Street in San Jose, California. Now, a lot of opinions out there. Did you know the bank started in 1983? Silicon Valley Bank was a commercial bank headquartered in Santa Clara, California. SVB was the 16th largest bank in the United States at the time of its failure, March 10th, 2023. You just lived through history, folks. You witnessed one of the second times in history that a bank has failed in the United States. I know some people were busy. They're too busy. They want to be in the stock market. Oh, man. Yeah, I didn't even notice that. A friend of mine today, he's not in the market. He gets a pass. I text him. He said, what's going on, man? I said, it's a real shit show right now, man. It's a real shit show right now. He said, what do you mean? I said, the 16th largest bank in America just failed, bro. Guess what? Company I own named Roku, they got some money over there. Bunch of people. My friend replied back, ignorance is bliss.
Is a subsidiary company. It's actually one of those words that's quite hard to say, isn't it? Subsidiary. Anyway, what is one? Well, stick around and we'll work it out together. Hi everyone, Simon here from the Contract Company. Contracts, that's what we do all day, every day, and sometimes overnight. So sometimes when we're entering into contracts, you're entering into a contract with a subsidiary.
Subsidiary. Say that word 3 times. Subsidiary. This was a subsidiary. I actually have a subsidiary. It's a hard word to say. So as we watch the price of emotion, fear, and greed, you say, how does this apply to the real world? Back up, bank failure, March 10th. You lived through it. What did the money flow sales signal come in? Right here. Now, I don't know that we would have sold our shares. I'm just telling you what it is. What it is, what has happened. Look at this. It's what we talk about. Where price breaks out, runs up, hits an apex point where it stops. Some force stops it. Then it starts to kind of meander sideways. And we'll look at this. They call this an ongoing feedback loop, is what I call it in the fractal definition. Remember, a fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. And you're like, what do you mean? This is a scale. This right here, look at this. This movement of price. Each one of these represent one day, man. The low, most of you probably have candles. Let me fix that. Make it make sense to you. Look, candlesticks. That's what most people use. I like bars. I don't know. Guy showed me use bars. I use bars. It tells us the same thing. There's the high. There's the low. The tick to the left right there is the bottom. And right there up to the right is the close. I like bars. My brain sees bars and it works easier for me. Boom. Bars. I can see it quick, man. High, low. open, close. Bam, 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 bam. Big day. Boom. Open down here. Went straight up, closed above the 20. We call that a breakout, man. And you're like, what do you mean breakout? Simple definition. The price. This is for me. I don't know what you call it. For me, if the price today is higher than the average price of the last month, holy shit, we're breaking out. That's the basic definition. You'll see these little spots here. Not perfect. Sometimes it'll break out and turn right around and break down. You might get it breaking out a couple times as it pushes, trying to get up there. These aren't easy day low. These violent, chaotic, emotional things. See what Kramer's got to say.
145 points, S&P falling 1.45%, and the NASDAQ tumbling 1.76%. Here actually makes sense. I listened to some of the smartest people all day, and I concluded that nobody, not even the Fed, knows what happens when the most important bank in Silicon Valley gets seized by the FDIC.
Most important bank gets seized, man. I had it up. Where's it at? Right here. Go to their website. www.eb.com. On Friday, March 10th, 2023, Silicon Valley Bank, Santa Clara, California, was closed by the California Department of Financial Protection and Innovation. Subsequently, the Federal Deposit Insurance Corporation, FDIC, was named receiver. It worked, guys. You had a bank failure. Everybody with 250 or less, you're getting your money back. What do you think you might want to do going forward, man? Let's say you got about 500 G's in the bank. What does Meb Faber talk about?
I think the first thing, if you're a bank depositor, is don't put all your eggs in one basket. So you want to spread that out. I don't expect it.
Come on, man. Meb Faber, we need, hey, don't put all your eggs in one basket. What do you mean? Can't put all your money in one stock? Can, and you start stacking up money. Don't keep it in one building, one HOA, one beach, one lake. Don't own one, Spread it out, man. Your money on deposit at a bank, the bank can fail. Your crypto, your brokers can fail, man. Mark Cuban wants the Fed to buy Silicon Valley Bank debt pronto. Not doing so, he believes, will shake the confidence of the financial sector and hurt tech startups and their employees. Oh, by the way, he's heavily invested in tech startups. On Friday, the bank failed following a bank run that saw investors and depositors trying to withdraw $42 billion on Thursday alone. Many are now worrying about the ramifications that will play out over the next week, called contagion. We got to see what's going to happen. That means we, as money flowers, are watching funds like KRE. Yeah, we're going to get into the leverage one, but let's start slow. Bam! Stage 4 decline. Now, the money flow gave a sell signal. Now, remember, we don't know these are right, man. I don't mean I'm selling. It's a sell pressure. Maybe it's a reweighting. Maybe it's you put on a hedge. Maybe it's just like, oh shit, good. I might get a chance to get some on sale. So I should pay attention. I should stop being so busy that I can't notice. A lot of your friends won't even notice this. They don't notice that right now regional banks have completely collapsed. Do you believe in the pending doom? America's never fucking coming back and we're going out of business? Probably not. So when we see something fall this far, opportunity alert. You may go, well, I'm not ready. Nobody fucking asked you if you were ready. It's happening right now. Get your shit together. That's the message. And you got people right now, they're too busy. Look, there was a buy signal. We know that to take gains. I'm just whipping through the money flow. But here's the thing. These things don't come when we're ready, man. That's the problem with debt and leverage. I wrote about these bank failures and you don't have to die broke. And in that book, if you have that book, I have a chapter titled, hey, and I'm not that sophisticated and I'm not that smart, so it's pretty easy to read. Dealing with financial fear. We've discussed protecting your wealth through diversification, through assets and separate accounts with different objectives. Man, what did Faber just say? He's Cambridge Capital, by the way.
Takeaway for investors from Silicon Valley Bank's implosion, and do you expect contagion?
I think the first thing, if you're a bank depositor, is don't put all your eggs in one basket. So you want to spread that out. I don't expect contagion because the story is actually really simple, and it's a story as old as time, which is a bank, and you could substitute the word hedge fund or anything else, made a very specific.
Listen to what he just said. Substitute the word hedge fund. Substitute the word John Smith. Jamie. What's up, Kathy? Anyone? Off me. So daily, I got to think about this. Guys, I got over $1 million borrowed. They want their money, man. That shit's ticking every day. I got money coming in. I've got bets on the table. This game's going to play tomorrow whether we pay attention or not, man. So if I have capital, if I have money, one, shake up, lesson learned. This is why we don't do dumb shit financially and overstretch ourselves. It's why we don't have debt on depreciables, because you're going to see this bank failed. You better wake up, man. This could be you. This bank failed. This bank failed because they got over leveraged. They were trying to do too many things at one time and they ran out of liquidity. It wasn't they didn't know what they were doing. That doesn't necessarily that all the loans were bad. They got themselves overextended. They bet too much and then they had no liquidity when they needed it. That could happen to you, by the way. A lot of people this has happened to, smart, intelligent people. Lesson to me. Wake up, Gerald. What's my liquidity situation right now? What if your bank went bust? Are you ready? Here, I'm going to let you know what's up. Your friends aren't ready. They're busy. We've discussed protecting your wealth through diversification through assets and separate accounts with different objectives. Now we need to discuss possibly the most prolific stealer of all wealth, that is fear. Financial fear is responsible for robbing more of the world's wealth, in my opinion, than any one event. That was this right here. You're over here. You're not an insider. You don't know. You hold the stock. Yeah, the money flow gave you a sell signal, but you're like, cool, I want to buy some more. Oh, well, hello. Welcome to the world of risk. This is the world of risk, guys. This has happened to me 3 times. Total, complete fucking shit show failure. And your stock goes from bam to bam. You better start crying now. Like, you better play that out in your head right now. Run through everything you own. Can it go to zero? What if this goes to zero? How does it affect me? Can you insure against it? See, one of the things a lot of people fear, look at this. This is money flow in real time, baby. SBV Bank, look at this. Sell signal. Look, man. Did it work or did it not work? Did the 5 go under the 20 or did the 5 not go under the 20? It's just math. Money flow trading system is fractal. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They're created by repeating a simple process over and over again. But this was failure. This is the thing. This is what's out of your control. This is the emergency fund. They got overextended. I've seen this happen. What do you mean? Totally long growth stocks on margin. COVID 19 hits. Implosion, blowout, over leverage, can't cover it. Wait, let's wait till tomorrow, see if it comes back. Done, out of the game. 4 days, 5 days, blown out. Just like that. Had a guy call me, $350,000. Boom, 4 days. Didn't react fast enough, didn't sell, didn't protect it, didn't have it in shares, guys. You got it in shares, you wait. You wake up, everything is imploded. You don't start selling, you start buying. Hello, meaning you play this out, man. Fear of losing something of value is completely natural. It's also healthy if fear is not too great. Fear is an instinct to help us survive. In other words, you better be paranoid. You got $500,000 in the bank. You better ask yourself why you think they're so worth it. You need to have 2. And you can't be, why do you want to be bothered? Get what I'm saying? Some people sit on 50 grand. I met a guy the other day. He'd been sitting on 50 grand for 7 years, scared to buy real estate. He sat on 50 instead of turning it into 150, 200, 250, and 250 into 500, and 500 into $1 million. Because to go from 50 to 100 is the same as to go from 500 to $1 million, by the way. You're like, what do you mean? Oh, well, if you went from 50 to 100, we could take 500 to $1 million. That seems like life-changing money to me. This is how we do it, man. We got to become observant. When things happen in the stock market, you got to be on it. You got to be looking. You're not too busy. You're watching. You're reading. It doesn't take a lot of time. What is SBV Bank, man? You need to go look, man. Started by Bill Biggerstaff. A dude named Robert came up with it in 1983 at a poker game. That's interesting. Now listen to this. This is important. It's a subsidiary. Man, I'm killing that word today. Subsidiary of the bank holding company SB Financial Group, which was the 16th largest bank. Let's look at that list again, money flowers. What is the number one bank in America by asset allocation? JP Morgan. JP Morgan is a direct tie to the money flow. Why? Chapter 10 of my free ebook, Dogs of the Dow. This is a 2023 Dog of the Dow. If you go to the newsletter, you'll see it in there. Where are we at, man? Do we need it? Where? Let's go here. See how all this ties together, man? Listen up. Some people are busy right now. Some people are busy. They don't even see it. Bam. JP Morgan became a 2023 list of the Dogs of the Dow. Means it's got one of the highest paying dividends inside of the Dow Jones Industrial Average. This stock is in a sector that is under fire right now. If we go look between the two, the bank SVB was a regional bank. Go read up on what a regional bank is. Google that shit if you don't know it, man. Google it. What's the difference between a big bank and a regional bank? Is there a difference? How many banks do you need to have be called a regional bank? Or you just need to live in a region? How's that work, man? Go look. It ain't going to hurt you. Now all of a sudden we know more about banks. Now, in the bank is what in the 11 sectors of the S&P 500. What sector? Huh? Listen up, Johnny. Sugar cakes. Listen up. XLF, Financial Select Sector Spider Fund. Right here. This holds the big top banks, man. If you go look up this ETF, this is an ETF, sector ETF inside of one of the 11 sectors of the S&P 500, which is the 500 largest stocks in America. Banking, these stocks make up part of it. What you have unfolding right now is a catastrophic event where the 16th, according to Wikipedia, 18th largest bank in America just failed. What do you think the possibility that could roll over into 2 or 3 more, which roll over into another? Maybe it doesn't happen, but if there's patient 1 and virus breakout, this is it. Maybe they contain it. Hopefully they do. Billionaire Mark Cuban is calling on the Federal Reserve to step in immediately and save a very productive part of the American economy, which is innovation. Huh? If it wasn't for that, you wouldn't have Netflix, man. You'd be bored. You wouldn't have Roku. You wouldn't have Uber Eats, Dash. So hopefully they step up and do that. That's something the Federal Reserve could do to help people out. Instead of talking all the fucking time and taking stocks down, you could actually intervene and help. That's an actual that's an idea. Intervene and help and stop lowering people's financial balance sheets. There you go, man. There's a useful fucking plan for you.
Yeah, we left here with no real idea. Will there be contagion? Could this be an outlier? We just don't know. At first blush, there was some strength in the market with the...
We don't know. So one of the 11 sectors of the S&P 500 is in uncertain territory. This could spread, but this could be an opportunity for you. When fear takes over your thought process, you will not take on positive actions you should. When opportunities come your way, you will shun them from fear or potential loss, or I'm too busy, or XY spouse won't let me participate. You will only see downside. You will live in an age where you're bombarded with information. You need to understand that most information is wrong. No one knows shit. The major media are almost always wrong about everything. Remember, these people are not investors, nor are they traders. They're people who have a job on television. Their job is to get you to look at things, i.e. YouTubers, clickbait. It's all bullshit. Nobody knows anything, to include me. The smart money purchased these assets when the masses did not want them to own them. And as prices dropped, the media reports stories of money they were losing. Most people believe major media. They think, how could all these experts be wrong? Oh, by the way, I said yesterday on YouTube, I've watched the insiders got out early. And we went and looked. Peter Thiel already got his money out. Insiders began pulling their money out of this thing last week. The bank began to pay themselves bonuses for the work they've done days before collapsing the bank. That's the fucking bank. You ever hear me say don't trust or believe anyone, to include your lawyer, your accountant, or your bank, or your realtor? They don't know shit. And you don't say it to them, but you think it. What does that mean? Meaning you got to be the defense. You have full responsibility, not your stupid target date fund or whatever other bullshit they put you in. You. It's on you. That's on everyone. Me, you. We control this. We get to decide what information we take in, what information we look at. You get to decide if you know or not that on October 17th, 1983, over a poker game, this bank here was started. And it went on to become the 16th largest bank in America. Before on October, what was it? Just now. Where's our thing? Did we close it? Yeah, we closed it. FDIC stepped in and took over the bank. On March 10th, 2023, it failed and the bank run on the deposits. Its state regulatory agencies revoked its charter and transferred the business into receivership under the Federal Deposit Insurance Corporation. Means $250 and low, you're probably going to get paid on Monday. The rest of you, we'll see. When? I don't know. Depends on, I'm sure the government's going to get right on that. In the second largest bank failure in U.S. history. I know, some people are busy. They didn't know the second largest bank in history ever just happened. This is patient one, guys. Zombieland just started. Maybe they contain it. Maybe they don't. December, let's see. FDIC called the Deposit Insurance National Bank of Santa Clara, operating from SBV's former offices. December 2020 regulatory filings estimated that more than 85% of deposits were uninsured, and the FDIC said it would begin covering those deposits with special dividends within days of SVB's assets were liquidated. Jesus. The bank operated from, operated from offices in the United States, India, United Kingdom, Israel, Canada, China, Germany, Hong Kong, Ireland, Denmark, Sweden. What do you bet some of that money's already been funneled back there? My goodness. What a shit show. Did you know that? I bet, the investigations on this are going to fly. How dumb you got to be to blow a bank up, man. Now listen, you're a bank too, man. You run the fund of you. You're you. The thing I always ask myself, what if I don't make any more money? What if they fire me tomorrow and I can't find a job? Every day I wake up, I think that. What if they don't let me on Instagram or YouTube? What if I can't do this business? What if I can't do that? That's how you know if you have net worth. You're like, it's all right. It'll be all right. This bank, they weren't all right, man. They tried to sell their bullshit assets and they took losses, major losses. They had mortgage-backed securities. You're like, okay, what does that mean? AG&C? Let me put you in on something. Everybody listening, listen to me. AG&C could completely collapse and fail. Better come to terms with that right now. That's the risk you're taking, man. See that sell signal? The day it collapses, you will have gotten a money flow sell signal, I promise you. Rarely does it happen up here. It starts. Why? People know. People are greedy. They're going to start to sell. They're going to tell their friends. Peter Thiel mysteriously removes all of his funds, transfer them to a different bank. We're looking for a new bank anyway. Next week, another hedge fund does. Then friends of the people on the board, then the board, and then, bonuses, and then shit gets funneled out from, that's how they all go down. That's how yours will go down. Let me hide this. Let me do that. You see it at the end of life when mom is about to go. Oh, we don't want them to get her house. They start trying to funnel and hide and commit felonies and crimes. Oh, but it's their assets. You saw it with FTX. Everyone does it, even regular people. You know why? Because they weren't prepared. They didn't have an order of liquidation. They were all in, completely leveraged. There was no safety net, man. That can happen to you. It can happen to your mama. It can happen to this bank. It can happen to any stock you own, just like that. Look at MFA. Why do you think I own more than one? Back this up. This exact scenario happened to MFA during the virus. $22. See that? MFA. I own this. During the crash, it fell to 25 cents. They went insolvent. You remember that? A lot of people didn't like me then. Man, fuck Gerald Peters. This thing. You know why this happened? They weren't anticipating a virus, and they got a little over leveraged, and in a few months it wouldn't have mattered because they got all the money coming in on the mortgages and the dividends and all the investments. They'll be good. But at that moment, they weren't good. They weren't liquid. They had no reserves because they vested them. And then bam, look what happens. Well, man, they've been killing it. Look, they've been killing it. All of a sudden, they got zero thing. Their loans aren't being paid, and their margins are being called because they go out into the world and they borrow. They borrow against their assets to buy more assets. Called a HELOC loan for you, by the way. Over here in the world of this, MFA Financial. This is important. I want to read to you. You need to think about this. So when this happens in your portfolio, and it will, you don't think Zim could totally collapse? Now, some people say, oh, that can't happen to, Yes, it can. It can happen fast, man. MFA Financial is an internally managed real estate investment trust. Oh, guess what? So am I. You're like, what do you mean? Well, my 17 properties are internally managed, by the way, meaning we don't hire managers. MFA Financial is an internally managed real estate investment trust that invests in and finances residential mortgage assets. The company's targeted investments include principal, residential, whole loans, and residential mortgage securities. Its residential whole loans include purchase performing loans, purchase credit deteriorated, and purchase non-performing loans. I mean, shit, they'll go out there and buy bad loans and do foreclosures. So the point is, these guys can get over leveraged. They borrow money to make money. That's how they pay you these big, fat, juicy dividends. This could go into total collapse. Did it once on me already. What else? Hanes brands. Everything can be okay. And then in a period of about, 6 months, it goes to a total shit show. And it'll just grind down. Some don't grind down. When you're leveraged and you're a bank, it happens fast. And the money flow signals. Money flow signal. Doesn't mean we can do anything with it, but it will let you know that the wind has changed, man. Let me hear finish.
Into the banks and techs, as in which bank's the next to fall and which tech stock's going to get hurt because it has money there, which startups will be crushed. I mean, hey, look, we just found out this evening that Roku had 26% of its considerable $1.9 billion cash hoard with this company. And we know there's never just one cockroach in a bank's kitchen.
Roku, we found out over the weekend, has 26% of its cash in this bank. Now, if we believe Roku, $59, look at that beautiful stage 1 right there, by the way. Runs up. Boom. Now we're on stage 4 sell signal. Be honest, Roku's held up well. We'll see how it weathers. If it weathers this, that is a pretty strong sign, guys. So this was basically coming out after the market. If you watch my notes, I was putting it on my notes, man. Because we want to study this. Why? Because if you go look at the KRE, this is the Regional Bank Sector ETF. What is all this about? Is this thing was $65. It's fallen all the way to $49. I don't believe the American story's over. I think over time, asset prices go higher. This sector could have problems. It's too soon to buy now. But what I need to do is start trying to peck at it. This one bank, I doubt, is patient zero. that starts to collapse at the financial situation. I think that's a little fucking dramatic over one bank nobody's heard of. There's a big difference on a list of the 16th, 18th bank than the number one bank. Big difference. Now, if it was one of the big four, yeah, that'd be really scary. I mean, you better be like, that's a fucking problem. Down here, it's a problem, but it's still containable. What they got to do now, look at some of these banks down here, man. F&B Bank, United Bank, Texas Capital Bank. They ain't even got that much money. Bank of Hawaii, man, they ain't got no money. Bank of Hawaii, $3 billion. Meb Faber trades more than that. Go read Howard Marks, man. Go listen to some Howard Marks. Be thinking about the money flow, right? These 4 stages of price movement. Lay that over fear. Some investors who do not trust major media are fearful as well. What persuades them is they read alternative media about the government, debt, worldwide economic collapse. So they put all their money into gold or bury their cash in the backyard. Instead of investing in stocks and real estate, they invest in bullets, guns, and gold. I own some of all 3 of these as well. Then when gold soars, guess what? Think I should sell it now? They're afraid to cash in and invest the profits in undervalued stocks that have been crushed or real estate. The result is just as bad for those who allow fear to take the wrong actions as those who allow fear to immobilize them into no action. Daily, I see how fear impoverishes people in the world of business. Smart, hardworking people who want desperately to quit their 9-to-5 jobs and follow their dream of starting a business fail to do so because they cannot get past their fear of loss. Fear of failure outweighs the possibility of success. It's human nature. People will do more to avoid pain and loss than gain pleasure of profits. Therefore, the entrepreneur is seen as a maverick or unique. That's out of the Dealing with Fear, my free ebook. Free, by the way. You don't have to die broke. I watch this and understand the money flow and that fear. I want to be greedy when people are fearful. So we got legit fear. That's what this looks like. There's the KRE, Regional Bank ETF. I got to start thinking as an investor, man, I'd like to get in on some of this. I don't want to be the crash dummy, though. So right now I got a bottom right there. That is an anchor point. As of right now, that is the bottom in this sell-off. Now, you may say, well, more news. Yeah, I know. I'm just telling you from a chart perspective. This is this. Wham! Do I think that's the low? No. But right now, it is. Meaning the next candle. Now, we talk about this a lot in my course, if you have Getting Started with Stock Charts. There's the 20, there's the 10, and there's the 5, and they're straight down, dude. Look how broken this is. If you go look on almost every chart you're going to look at, shit, let's pull up Wells Fargo, man. Look at this bad boy. Now, let me show you something on Wells Fargo. Oh, you're like, oh, I want to be a trader, okay? Then trade fear, man. Look at these moves. It looks a lot like, wait, man, come on, man. What is this? Come on, man. In real time. Look where price stopped. Holy sheep shit. Look at this, man. Look at the support. You got friends, they don't even know what we're looking at, man. Wells Fargo stopped exactly where it stopped before. Bam. And before. That is called support, my friends. In real time, the drama. Look at the drama. And this is an eye into the soul, the window of the stock, man. Look at this. Wells Fargo. Come on, baby. Look at it. Stop right there. Look at the RSI. So, like, this is right out of our playbook, man. The basic money flow trading technical indicator list. You need to understand the 5-day exponential, the 10 and the 20, their relationship to each other. It is a tight-knit family. And man, when they come together, shit can happen. But when they break up, things are a problem. Either way, to the upside or the down. But eventually they come back together. And that's what's important to understand. And the difference between the exponential and the simple. Then we got the RSI. RSI is just like a yellow light. It's like, hey, man, we went too far, bro. Look, whenever it pumps up, it tends to stall the action, so to speak. Yeah, it's not perfect. I hear people criticize. That's dumb. Too many times it works right on the money, not to at least look at it. I heard a guy the other day make, well, it might keep going. Yeah, it might. But if I use it every time, I'm going to take a little money off. It keeps going. I take a little money off. That seems like a winning strategy to me. I don't know, man. So if I see something that works, shit, sometimes I'm looking. You're like, what do you mean? Well, if I got a nice suit on, I look up and it's fucking cloudy. Well, let me let you in on something in Texas. Every time it's cloudy, don't mean it's going to rain. But sometimes it's a goddamn thunderstorm. So if you wear, you might want to take that into consideration. Especially if you live in the country and you got a truck, you got to drive, you got to think about it. You got to take some boot. Like, you never had to take boots to go to work, man? So right, you're playing fractal patterns in your life, man. You do this all the time, man. There's all kinds of fractal patterns. If you were to watch yourself, the way you leave the house, the way you put your clothes on, the way you get in the shower, it's just a fractal pattern. Well, price does the same thing. It sells off. It goes too far. Everyone like me are like, whoa, it's underneath the 200. Oh, wait, it stopped here before. And it becomes this self-fulfilling thing. Now, if the news continues to weigh on this, this won't be the bottom. And this will take time, so there's no rush. If even on this, if you notice when it finally stopped and jumped up, came back, it takes a minute, man. So just look at that. So if you're new to the money flow, watch this. Think about this. Had a guy quit the money flow gang today. He said he didn't like the way you guys talked to him in Discord, man. Well, you guys, I don't know, man. Better start being nice. Hey, better be fucking nice to people or I'm going to kick you out. We're not initiating. Some people can't handle it, man. They don't like when people get onto them for doing stupid things. They don't like to be called out. So if someone says something, you just let them, man. We can't attack them or you're going to put me out of business. Let me be mean to people. You guys be nice to people. This is the bottom. Well, unless you want me to go. I mean, I could go to your restaurant and cause trouble. That'd be cool. So don't do it. Get what I'm saying? This is the bottom and this is support. Money flow gang's vicious. You get people from other groups and they get over there and they're like, God damn savages, man. Like, yeah, they want you to succeed, man. They don't want to hear all your bullshit excuses. Here's an idea. Get it right. That's an idea. Like hold yourself and your kingdom and the crown. Very, 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 very important. So we see it coming down and our fractal pattern is sideways up, sideways down, sideways. I don't know if this is the bottom, but I do know that's what they look like. I don't know if this is the only bank that's going to go out of business, but hopefully it is. And each one of them is going to be the only one. So if we have contagion, another one fails, that probably only going to be that one. Couple banks, what was it? Was it SW Pack? What was it? SW. What was it? I don't have my notes in front of me. Anyway, a couple other banks, FRC. These are ideas you could keep an eye on. This bank got smashed. People jumped on this quick. If you're fast, sometimes you can catch these. I don't like that game. Moves too fast for me. Look at this. Bam. But somebody grabbed it at $45. You got $100. Or, somebody put 4,500 on there and bought 45 shares. Look at that. That thing came back to 81. They had a 100% return in one day. So this morning I was looking at that. I'm like, damn, let's drop that down to a 15-minute. Could I have caught that? Remember, the money flow is fractal, and it's like, nah, don't look right. Move too fast. Let's drop that down to a 1 minute. Uh-oh. What do we see? We're watching that 1 minute. Look at that, man. There were others on a 1 minute chart, so we could back it up. Look at that run, dude. You have to be fast, though, man. Let's go to a 2-minute. And your brokerage, whichever app I use because I can travel. Look at these moves, man. Doesn't that look a lot like the money flow? Look, one extreme RSI to the next, one extreme RSI to the next. Or price above the 5, right? These are moving fast though. Stage 1, RSI went extreme. But same shit we're talking about, right? So this here. So if I'm watching price and price sells off, bam, RSI goes extreme. Price starts to move sideways. It gets above the 5, like it's starting to move. If I'm trading pure momentum on that, then bam, I'm in. And then what? We start breaking out here. Well, my stop's down here. You know, we start to run. Obviously, I want to move it up. Boom, take some off. Now, you get fake breakouts like here, started to break. But look, it still held the stage 1. And man, we could have traded the shit out of this. What is that on? 2-minute? And now what? Starting to break. And look, we got support right here. So that again, the money flow is fractal. So look at this. Here's a leverage. But you're saying, well, that's day trading. I can't do that. I'm at work. I know. So we got to take that same concept to the daily where you can do it. Windows just said don't hit your computer. Whatever I want. RSI is extreme. We got a possible bottom. I need price above the 5-day, right? So if I'm watching this week, now some people are just going to jump it. I'm not going to jump it. I'm going to wait, man. Because look, I don't want to tie up any money until it's ready to go. So I'm watching this. This is the triple leverage. So if you look, how much was this down? It was down 13%. Well, if you got a, what's this? You multiply 4.39 times 3. I think you're going to get like 5.17. And this is 5.3, or this is 13 point. I mean, you're going to get 13.17, and the DPST is at 13.17 or 15. So the 3x is working perfect. So I would be looking at this for a trade if I'm money flowing, right? This is the leveraged. So this thing fell from $30 to freaking $12. That's huge. Well, if you look at KRE, it fell from $65 to $49. That's a pretty big fall too. But the other one's 3x. So we got 3x. Now here's the thing. If this isn't contained and this starts to spill over into these other banks, this thing's going to get obliterated, okay? If more of these banks start to come down, so you got to think that through. The Science of Getting Rich says thinking is the hardest thing to do. What's the exit plan, right? So we want to think, okay, well, we got an anchor point. And so I'm just going to watch this week and watch this thing build out, man. You know, I don't have any reason to believe this is the bottom. Right now, price is just jumping around. I'm patient. I'm waiting for the setup. If it's going to recover, it's going to recover. And I'm going to wait, man. I'm waiting for my move above that 5-day, which the 5 days right here. And so this is going to take a minute, man. That's good with me, man, because I got other shit to do. But I want to stay on top of this story, man. I want to know that this thing was created in October of 1983 at a poker game by Robert Biggerstaff. Shit, I know a dude named Robert Biggerstaff. That's interesting. So we got real opportunity here. Also, MPW. And we're money flow classing. But what the money flow does, I had someone yesterday. Oh, I'm going to buy some. You can. You can. Just understand it's going lower, guys. There's nothing about this says that it's not going lower tomorrow. So as long as you understand that, that's where it's pointing. Everything's pointing lower. So you could look at it as good. I'm going to buy it all the way down every day. Bam, bam. Knowing that that is a stage 4 decline. There is no sign of a bottom. No reason to believe that's the lowest low. Now you may think, fuck, I don't give a fuck. I'm going to take a shot that that's the lowest low. I'm going to drip down. So if you're nothing wrong with playing it that way, honestly. If you did it small, just don't buy a bunch thinking that's the bottom because you don't know if that is or not. You could play that game, but for me, I'm trying to accumulate over my lifetime. So I definitely got to add to it now. right? It's way under, like, so a lot of these, man, look at Walgreens is now, look how far it's under the 200. Look what happened last time it got down here. Well, shit, it might stay under the 200 for a minute. What do we see here? Stage 4 decline. Anything about this look like it's going up? No, man. So you could have said yesterday, well, I'm going to buy that. That's the bottom. No, it ain't. It's going to keep going until finally it is. And when it is, what's going to happen? You're eventually going to get, look how low this one went. So this guy's like, well, that's the bottom. Okay. That's the bottom. Okay. It just keeps going, man. Until what? It gets above the 5. That's the first clue I got that maybe it's done. Now, does it matter if you bought some here and here and here? No. You're in the general zone, okay? But to the guy that I think that's the guy quitting. Are you the guy quitting? Better not be. Because I got on to him and he goes, well, what's it matter if you buy up here on a 70 RSI if you're going to own it your whole life? What do you mean, what does it matter? It's fucking night and day. Like, if you can't see that buying up here versus buying down here, there's a difference, man. Look at here, or look at the RSI. It's on the wrong side, man. All the indicators are saying overbought, overextended. Doesn't mean it can't keep going, but if you go through life buying shit overbought and overextended as a philosophy of life, it's the exact opposite of a philosophy you should have, which should be when others are fearful, I'm taking advantage of opportunity. I mean, this just as a core fucking value system. I'm looking, okay, and what letting the stage setup does for me is it gives me a repeatable way, a pattern, and it gives me a way to watch. And it also gives me a little bit of downside protection. And then I'm making it give me a little bit of proof. You know, that's not a lot. 4 bars is not a lot, guys. In the grand scheme of the world of fucking price movement, 4 days, 4 bars is not you being overly aggressive. I mean, that's not being conservative by any stretch of the imagination. You know, most people would think 4 bars means nothing. But if you look at this bar, that bar says down. That one stopping does not say down. It had stopped here before, but if you look at everything else, look at the move, everything is pointing down, man. Look. Nothing has ticked the other way. So until this, at a minimum, shows me some sign, I mean, anything. If I'm doing anything, it's just tiny drips. Tiny, just drip, drip, if anything. I'm waiting on that setup, that turn. This could take weeks, man. So every week as I go forward, where are we at on this?
People did not think, they were in a Great Depression. Very much like that occurred at least a dozen times, although not always when stock markets were important. But we'd had many recessions in the United States over the time, and this did not look like it was something dramatically out of the ordinary. Actually, for about 10 days after my birth, all of 1 or 2% there. Well, from that point, the stock market went from level of 240 to 41, which was a noticeable decline because if somebody had stocks with it and bought the Dow average, my $1,000 would have become $170 in less than 2 years. That is something. But in terms of having a broad range of America marked down 83% in 2 years and marked down 89% of the peak was in September 3rd, 1929. Period less than 1 year after I was born, less than 1 year. My dad went to the bank where he worked and had his account, and of course the bank had a sign on it closed, and so he had no. Father had a grocery store, but I both worked for my grandfather. Charlie worked there in 1940. I worked there in 1941, so we didn't know each other. But my grandfather said to my father, about your groceries, Howard. He says, I'll just let your bill run.
Just let your bill run, man. Sorry about that. So, if we're looking at investing, play, and keep this in mind in the future. You're going to have contagions in retail. Retail falls apart. You're going to have contagions in growth stocks. We had that. You've experienced it. You're going to have crypto contagions. All of these sectors, all of these sections, all of these pieces of the economy are just a puzzle. It's a piece of puzzle. Best thing for you to do is not to avoid it. It's not to be all in, all out. Never make that call, because you have to get it right twice, and if you get it wrong, you will fuck yourself forever. You will never recover from it. You'll never get back in. And I've seen that happen to person after person, and all they had to do was put on a hedge if they were worried, understand how an inverse ETF worked. They could spend a little, or just build some cash. And they could see it as an opportunity. And so all these sectors going forward, this is how I've built out my portfolio. You're going to have clothes manufacturers have real problems. They can't get the cotton. There's a strike. There's a war. Something. It causes fear, and the markets overreact. Look at Welltower. Sometimes they all do it all at the exact same time, and that makes it difficult because you're like, well, fuck, what do I buy now? But look at Welltower, and I'm going to take this back. Let's go to the weekly. Back over here. These are the days that we hope to forget the virus, when everyone lost their fucking minds. This stock fell, and this was one of my favorite stocks. It was breaking out on the weekly. You can see trading at almost $80 a share. I own it today. Over $10,000 of it fell to $22.50. Buying opportunity of my lifetime. And I could show you this for almost every stock in almost every sector. But how you responded then played a huge part. And guess what happened here when they stopped your business? You're not making money now. Instead of taking advantage of the greatest buying opportunity in your lifetime, if you're leveraged, you got eating problems, not buying stock problems. This is why I always tell everyone, it's all about the buckets. Because when you get an opportunity to change your financial future, you'll be just as fucked up as everyone else around you, and you won't be able to take advantage of it. That's the truth, man. Because a lot of times when these things are the cheapest is when it's scary and it's real. It's fucking not made up. These are real problems, you know? And here's another one. These are brought to you every day, man. EITO. This is the futures contract for Bitcoin. Traded just like a stock. Whatever Bitcoin does, this thing does. Bitcoin goes to 100,000, this thing's going to 100,000. And you don't even have to custody it or own it or worried about being hacked unless these guys get hacked, which is a possibility. But these guys are trading a contract, not the actual Bitcoin. Notice it says Bitcoin Strategy ETF. So they don't even hold the actual Bitcoin, just the price of Bitcoin. So if there's a fucking possibility that these people take this shit to 100,000, I'd like to be in and on it. I don't need to like Bitcoin or not like Bitcoin. The fact that they could do it. If somebody wants to pay me $1 million for one of my 2-bedroom shitty little houses, I'll give it to them. And guess what? There's a price where those houses that I don't want to live in personally, I don't want to live there. I live on a compound. You know, I have multiple houses. I don't want to live in one of my, but other people do, right? So just in other words, you don't have to like Bitcoin, want to own it to trade the volatility of the price. You're a trader. You're an investor. As an investor, you need to learn and develop trading skills because that's going to allow you to attack your investments with a precision that index only and people like that don't understand, nor do they have. Here's the thing about the index only, dude. is, taking on the risk of individual stocks is way more dangerous, because in an index you have 500 stocks. One of them goes to fucking zero all the time. You just don't feel it. Same as if you went out and bought 500 of them. You wouldn't feel it. But when you have 10 of them, you're going to feel it when one drops. SBV was 2.3% of this index, of the KRE, Regional Banking ETF. Look how far this thing has fallen from a position inside of it that was 2.3%. That's fear. Did the money flow tell you there was fear? Yeah, you don't even need to know the story, guys. My friend said ignorance is bliss. Could be. See, what do you mean? It could be, bro. You don't even need to watch the news. Every time you see this happen, get out you pull your thumbs out and wait. Pull up that chart I showed you. Just type it in. We're looking. We could take it more advanced. That's a reversal candle right there, but we ain't even got to get into all that. Maybe you don't even need to understand the 4 stages of price movement. Oh man, look at this. It's a big, nice one too. We want to catch the other side of that, right? He might not be able to see it, and you said ignorance is bliss. It could be. You don't even need to watch the news, or no. Sometimes you watch the news and it fucks you up from this. Oh, I can't do that. What if it's over? I should go get all my money out. Right? You guys might laugh. That's, dude, 2008, you saw it. People were doing the dumbest shit you could possibly imagine. I watched people who have been invested in markets 20, 25 years go to all cash near the bottom. Saw Jim Cramer go on the morning show telling everyone, if you need your money in the next 5 years, you better pull it out. It was the absolute fucking bottom. 666 was some shit like that was one of the bottom numbers for the S&P. It's easy now, from where you're at, making good money, life is good, you got low debt, to talk, oh, I'd have been brave. Yeah, okay. Because you watch, you see the Discord go silent. Those days like that, a lot of people talk shit. Not that easy in real time, especially when you watch 1 million become 500,000. And then they lay you off at work. And that car payment kicks in. Oh, and then boom, contagion. Don't take long to turn 1 million into 380 and you're getting out. Then to watch the stock market go up 400% over the next 5 years. I watched that happen to a lot of people, a lot of smart dudes too, man. If you're fear of losing, well, let's see. The result will be arriving at retirement only to realize you're facing a future poverty. You're now a slave to the government. You're now forced not to vote for the best politician, but the one who will cut you the best Social Security check or give the most money to your community. We steal from our children and grandchildren through taxation to fund the retirements of those who didn't. This is unfortunately our current situation. The easiest way to deal with fear is to control debt and to live below your means. If you live paycheck, in other words, it's not options. It's not learning fucking day trading. Best thing you can do is to have fucking money when shit goes on sale, period. The easiest way to deal with fear is to control debt and to live below your means. If you live paycheck to paycheck, you realize replacing any lost wealth might be impossible. The trick to money is having money. I know that sounds obvious, but you must have money you don't need to live invested, making you money, meaning you don't need this money. So when you start to come at this and you're like, you know what? I'm going to buy Wells Fargo. You're like, why? Bro, stage 4 decline. Look at this. I've been buying this shit my whole life. What's up now? Right? They pay that big fat dividend and you're buying into uncertainty. Anchor point. What am I waiting for? This right here. Same as I was here and here. That's it. Repeatable pattern. Fractal pattern. Was that the bottom? I don't know. It's what they look like. I'll buy all of them. What if it comes down here? Same thing. Same game. Deal. Pass the cards. Deal me in, man. Let's go. Next card. Fractals, a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, pictures of chaos. Geometrically, they exist If you're not scared, you probably don't have enough invested. Geometrically, they exist in between. I'm scared all the time. You know why you don't get freaked out about hurricanes in Florida? You ain't got no beach condos in Florida. Go get you 3 or 4, have about $1 million down there. See how the weather affects your mood then. Most people ain't got much money in the stock market. Go get about $800,000, $900,000. Go get about $50,000, $60,000 of Wells Fargo, and it falls from 46 to 40. Let me know how that feels. If you're like, yeah, baby. Yeah. What's up now? I like that. Very few people are like that, by the way. They all talk tough when the market's going up. Everybody loves the market when it's going up. When it gets down here, you'll see it. It'll start to quiet down. You watch this shit drop by another 50%. You watch. Maybe 70. Maybe fucking 90. You know how many times Bitcoin's dropped 90%? How many of your Bitcoin should you have sold? When was a good time to sell all the Bitcoin? When it went from $1 to $100, that's 100x. From 100 to 1,000, maybe 1,000, 12,000. Was that a good one? 12,000 to 25, 25 to 45, 45 to 70. What was it? Almost 72, or was it at 20,000? When's a good time? When was your fucking philosophy of not owning it or selling it over its lifetime? When was that a good time? See, far enough the picture goes out, it's never a good time. Start to shrink it in, you'd be like, oh, well, I would get in here and get out here, Gerald, and in here and get out here. Like, that's what I would do. Would you? Okay. Started buying some here, by the way. Little early. Why? Money flow. Remember over here in New Orleans, I drew it for you. I said, we're in a stage 4 decline. What's my plan? I'm not selling any Bitcoin. I'm buying. My next level was going to be 19,700. Remember I drew that on the thing? And you say, why? I'm no genius, man. This is money flow. Price goes where it's been before. I don't know where it's going. I just do this. You say, where do you think it's going? I don't know, man. I do this. I diversify myself across different assets, different sectors, different things. So what have we been buying? Bonds. TMF. Why? Bonds were building stage 1s, man. It's below the 200. I like anything below the 200. I'd like your sister below the 200. If she's below 200, I like her. I'm going to be honest. Look, man. Now, if we go back here, you're going to be like, fuck this dude. Remember we were buying over here too. I liked it then too. Why? It was below the 200, man. You're like, but yeah, but it went from here to here. I know. It's all right. It's bonds, bro. Where do you think it's going? Zero? It's the U.S. government, man. I mean, it's all right, man. Take it down. I ain't got enough shares anyway, baby. You think you got enough bonds? You ain't got enough bonds for anybody to even notice. You could sell all your bonds in a market, be like, bloop. Didn't even notice it. Market didn't even move. So whatever you had up here that went down here, and you were upset about, come on, man, baby money. Come on, man, baby money. Baby money, man. Why are you crying about baby money? None of you even had any Bitcoin. It was, why 100,000? Man, that ain't no money, man. Was that your limit? Your mind couldn't handle it? You thought 100,000 was a lot? Where are you from, man? That ain't nothing. It's a spin of the dice in Morocco, man. Ain't no money. We live in a world of abundance. We want to get a lot of this stuff, man. The only way I can do that is through time. You know, we've been adding. Hopefully this ain't the big run up. Now they got a long ways to go. What about gold? You got a lot of gold? You gonna move the gold market? I got a lot of gold, Gerald. Do you? So what are we playing here on gold? We got our bottom. So we're technical. I'm not investing in this. I'm investing in Bitcoin. You could invest in gold though. And again, we'd be buying here if you were an investor. You'd want to buy these stage 1s, right? So if you remember back here, when the precious metals, stay with me, man. I feel like I've lost some of you. Where's my, Let me pull this up, man. We don't need to see the banks anymore. Now we're just money flowing. Go to the back here. If you go to my newsletter in the beginning, I'll update this today, man. I put a lot of time into this. I don't ever get much feedback on it. Let's see. Whiteboard. I've been working today, so I'm not ready to. It's gonna be kind of fucked up today. Everything is down, man. So I'm gonna kind of leave it sparse because thoughts and ideas are. I want to see where some bottoms are. There's some high yielders I'm still looking at. ETRNK, CVS looks even better to me. Walgreens. We got a flip on this. Now we got bonds and we got metals. Kind of leading the way, man. We were talking about that right in here. Adding to bonds, TLT, TMF, waiting for a breakout. We're expecting it. It's going to happen for certain. Here's TLT if you got bonds in your retirement. These are all connected. This is the 20-year treasury. I'm doing it more as a trader with the TMF, 20-year 3X leveraged. So $80 would have bought me $300. You got a bond trade going. You might think, well, that's not a lot of money. I know, but now you're learning. Repetition is the mother of skill. Now you're in the game. Sometimes the people, well, I didn't get into gold with you. You didn't have $1? Like, it's not about you having a lot of money in it, man. It's about the fucking education from it. So you didn't have $60? Couldn't buy one? Imagine if you bought one. You're in it with me now. Now when I talk about it, you're in it. It means more. It's going to sit more with you. And now what are you seeing? Well, when the market became troubled, gold is doing what it's supposed to do. It's going up. Fuck. That hasn't happened in forever. A lot of people are taking this for granted, man. Look at bonds and gold. They are going up because the market went down. They're supposed to. They hadn't been doing that in so long. It's like, oh my God, could we have a normal market again? I don't know. But if you didn't bother buying any, too busy, I guess. Why clutter my brain with information about gold and bonds? But it's super important because it's going to help you understand the entire stock market. So if you're 21 and can get this through your brain now, dude, what happens when you're 32 and you have 500, a million, and you're taking $50,000 bond positions? These protecting, this thing can change. You might be buying 1,000 shares of this. You might, man. What is this? The triple, right? Where's the triple? Watch this. Now, I'm not advocating this, but I'm just saying, let's say you make more money, man. And you're looking at this triple. Let me get 25,000 of that on a stage one. You place a stop. You're not playing this with 30 shares. You're playing it with 4,000 shares. And it goes from 22 to 38, man. It makes you 30 grand in 3 months, 4 months. Like, that game is available. You're not going to play that game, though, if you can't play it with a little bit, man. So, you guys not doing shit because, I don't have any money. It's like, really? You can't buy one share in practice. Just one. You get what I'm saying? Like, get in the flow, man. Watch it. So have an opinion on gold. That's why it's so important, man. It's right here. I'm not writing it because it's fucking fun to write metals. Oh, metals. Let me just write this and watch it. Ignore it all day. No, you're writing that because it's an actual part of the economy. It's part of the money flow. If everything goes fucking shit shiola, that's going to go up. So in order to protect myself from always being fully 100% bullish, I need to kind of follow some things that actually, by its very nature, when it gets hot and it gets going, is usually going opposite of what my holdings are doing. So I want to own shit like gold, Bitcoin, bonds, because they're going to detach from the stock market. And you're going to have things going up when other things are going down, which, one, keeps you interested. Two, it keeps you in flow. Three, it kind of hedges, and it could give you money to turn around and buy Lyft or something. So where's Lyft? We had on Lyft. Hide your sisters. Oh, this lift is setting up, man. Unless this thing's about to go bankrupt, all this banking shit could have really helped out here. It already wasn't doing well, but it is definitely not doing well. You know what that is? Margin calls. Some of this is margin calls, I bet. Remember I was saying yesterday, you're going to start to see on this bank, so-and-so told so-and-so, and his fund pulled out, and then their brother pulled out, and you're the last fuck to know. That's the way it works, man. But the chart told you. You're like, what do you mean? Shit. Chart told you what was up, man. Right? Chart told you what was up, man. Look at this. Back over here. You think when that price came down, what do you think that is, man? That's those funds and people liquidating the stock. People knowing, man. I know there were people that knew. Look at this day right before the day. Look at that big drop. That was when it was like fucking hitting Twitter. People are WhatsApping each other. I was reading this thing about a guy. He didn't want to give his identity, but people, friends of his that had like people on the board of the bank were telling him, hey, man, you might want to get your money out. And that's where you start seeing people. That spreads to people who own the stock. They start to sell. And then, man, then it's public. And that's where it opens. And then it's just shit show from then. Closed out. So be careful. But when you see these, be aware. FE is one of the ones we were aware of. We got into this. We'll back this up for a second. And then I'll end here, man. I won't keep going, but sometimes I get going because it's fun. FE, if you remember back before the virus, this happened with FE. This had been a $47 utility, biggest utility in Ohio, and it got smashed. Fell like 20, 30%, like way down, dude. And it happened right before COVID, man. And then bam, all of that on top of it. And at one point, this thing got down to like $21, dude. And a lot like CVS, I started buying a stage one in an asset that, in my opinion, was undervalued. It paid a dividend over here. And then other shit came out, which took it even lower, man. So it's like, oh, you're saying buy this thing at 36? Now at 21, man. What kind of bullshit is this? And it's like, no, man, this is a gift, bro. It's a gift. Either A, drip the dividends, which are going to go up 300%, 400%, 100%, whatever. They're free, by the way. So any dividends that came in here were free money that then doubled. Right? But if you're just focused on this, and you can't see this as opportunity, Welltower. I'll end with this one. I didn't finish what I was saying. Yeah, I did. It fell to $25. So be aware. We have that chance right now in banking stocks. We have that chance in anything to do with a hospital, anything to do with rent collection, anything to do with a bank, anything to do with mortgages and leverage. You're going to start to see mortgage REIT, Anley Capital, MFA. They're going to start to come down. You watch. This is, I don't think it's the bottom. Not a doomsayer. I'm just saying, watch for good levels. Look at Bitcoin. Bitcoin setting up, man. You should be buying some. Anyway, you guys be good, man.